All right, what's going on, everyone? It's a new week, and that means a new set of earnings trades for us to take a look at together. There's literally 250 potential events that we're looking at for this coming week. Once again, I expect to take somewhere between 15 and 20 trades this week. And the thing about this week is there's something special going on, right? There's the US presidential election. And talking to people in the Predicting Alpha community, there seems to be some hesitancy around whether we should be maybe sitting out this week for the ETF strategy and the earnings strategy, or if we keep going business as usual. And so I want to take a second to talk about that before we maybe look at a couple trades here together. So look, the way I think about this situation is that it's business as usual, right? The US presidential election is there. It's not like the market's ignoring it. So it's not like there's extra hidden volatility coming out of somewhere. The premiums for this week for the ETF strategy were literally double that of last week, right? Market's obviously pricing in increased volatility this week due to the election in particular. And I do think there's a chance we see a bit more volatility, but the market is accommodating for that. The market's not ignoring it, and it is pricing it. And my thinking is that unless we see something really drastic, and knock on wood, I would hate to see that. But unless we see something really drastic, I expect this to be a business as usual week for the ETF premium strategy. Does that mean that it's guaranteed to be calm? Obviously not, right? Like, make your own decision here. And I'll talk about that in a second too. But for me, I'm still in the ETF strategy. I rolled into my new positions on Friday. So far, so good. Everything looks fine, exactly within what we expect to see. That being said, the election hasn't happened yet, right? The election, I believe it's tomorrow. Now, let's say you choose that you want to sit out this week, even though the premium's there, and we know that, generally speaking, just stay in the trade unless something catastrophic happens. If you choose to sit this week out, I don't think it's the end of the world. And the reason for that is because the premium is still going to be there. The risk premium doesn't go away because elections are over. The risk premium is there regardless of the IV percentile. If you remember from the masterclass, the strategy masterclass for ETFs, we talk about the fixed percentile and the variance risk premium, and it's there at all percentiles. So after this week, if you choose to sit it out, there's no harm, no foul, because you can just get back into the game and the premium will be there for you. Now, if you continue to trade it this week, this might be a week where you earn a little bit of extra money because the premium is so high. So there's really no right answer. So whatever you choose to do, make a decision that you are comfortable with. But remember that as a option seller, we are getting compensated for holding risk. You just want to feel like you are getting adequately compensated for the risk that you are holding. So that is the way that I would think about this decision. It's like, do you feel like the market is adequately pricing the risk around this election, right? And I'm not saying like the risk that the election goes one way or the other. I don't think that's what will move the needle here. It's just like the impact on the market from the election, right? Like remember, we're trying to say how much will vol change. That is what we actually care about, not necessarily like who wins or whatever. It's just how much will vol change. So make a decision on that for yourself. Do you think the market's pricing that fairly? I actually think there's maybe a little bit of extra vol being priced in here. And so I'm selling. But make your own decision. And I hope that makes sense. Of course, if you have questions about this, if you want to discuss it, if you have information you think I should be considering even, please leave a comment with it. Or if you're a PA member, obviously throw it in the community. We can get more eyes on it there and maybe make a decision as a group. And then as for earnings, I literally, maybe we'll see what I do tomorrow on the night of the election, but I don't foresee this having any impact on the earnings risk premium. Like, maybe I'm missing something, and if I am, please call me out on it. But I think it's business as usual there as well. For example, the trade I placed today doesn't even see the election. The trades that I'm going to place after tomorrow, they don't really see the election either. So it's maybe only the trades tomorrow that could be impacted. So maybe for those, I'll like size down a bit or size up a bit, or I don't even know yet. I'll definitely want to chat with the community about it. But generally speaking, it's business as usual. So I'm not even concerned. We're just going to keep it rolling. And, hopefully we have a bit of a less volatile week than we did last week. If you remember from my video on Friday, we ended up making a profit last week. but it was not without some scares. We had a couple trades that, were like 2x losers. I think we had a 3x loser almost. Those happen, right? They happen relatively often, to be honest. So, that's fine. I just wanted to chat about that and say, hey, hopefully this week is a little bit smoother. So with that being said, let's jump into some trades. Let's take a look at them together here. And I'm going to do my best to walk you through that story of earnings. I think that's such a great way to analyze these trades, is just to think about it as you're trying to get a picture of what's happening around the event. Because in the end of the day, that's what we're doing, right? We're trying to say, do we believe that the risk premium here justifies, selling protection and selling lottery tickets, more or less, right? Selling these things to people. Does it make sense for us to do that given the way that vol has been priced around earnings historically? So the first one on the Docker here, right? I've just got today's earning premium scan up, the one that's built into the terminal. No customizations. Only thing I did was I sorted by the short straddle return here. You can see, by the way, earnings dashboard update coming end of this week, most likely. Thanks for all the feedback, everyone. It's going to be really good. NXPI is first up on the Docker here. Let's take a look. All right, so this is one that we're probably obviously trading today. And let's walk through this story here. So NXPI is a semiconductor ticker, trading at about $237. Going to keep that in mind for sizing of the trade. Right now, the market's implying a 6.78% move for the earnings event, meaning the ticker is expected to be up or down 6.78% after earnings tomorrow. That's what the option prices are saying. But when we look historically, we can see that the average earnings move is actually much lower. On average, this thing's only moving 2.11%. So a much lower move than we typically see implied. And then if we look at the largest move historically, which looks like it was actually last quarter, something to keep in mind, it's about 7.58, 7.6%. Pretty big move, right? This is a $61 billion company, so it's not like a penny stock by any means. 7.58% move is pretty big. I think this might have something to do with the semiconductor space in general, so we want to keep that in mind. Maybe we can take a look at how other semiconductor companies have performed recently, and if NXPI's price has adjusted based on those moves. So if we see that all these other semiconductor companies have taken 10% hits recently, might make us a little weary of trading NXPI. But if we see that NXPI is also adjusted in anticipation of that, then maybe some of the blow is expected to be absorbed, and all of a sudden a 6.78% move seems a lot more reasonable to sell. So I'm going to take a look at that, and I'll probably stress it to a 15% move just based on doubling this here. And remember, when I say stressing it to a 15% move, that's what I expect my, few percent of the time loser to be, a 15% move. It's not the worst loser that could happen. I expect the worst loser could be a 50% move on something like this. And I need to be able to survive those. But in terms of regular drawdowns, I expect I'll stress it to a 15% move. From there, average straddle P&L at 28.7%. That's huge. This is what else do you want, right? That's a huge return on straddle for a single event. If that's what we're getting on average, this is definitely one that I'm going to be taking. Assuming there's enough liquidity to get in and out of the trade. Looking at the back test P&L, come on. I want my portfolio to look like this, right? Obviously the last trade here was a loser, and that's to be expected. If we just, take a look at this here, that's to be expected. Taking a look at the historical analysis here, we can see that basically all except for one event had a jump that was smaller than the implied move. So generally speaking, we should expect the jump to be smaller once again. Now, with that recent move, I'm not going to do it on this call because you're going to sit here and watch me screw up my research for a while as I try to figure out what semiconductor companies have had earnings recently. And so I'll do that after this call. But I'll go take a look at how the rest of this sort of sector is performing as of right now. I'm assuming that a lot of these have had big moves recently. just given the growth of AI, the growth of this sector, some of the volatility that is experienced. So I wouldn't be surprised to see this thing continue to have more volatility. But, if we think about it, the last earnings had a 5.7% implied earnings move. And right now it's 6.78%, which is the highest it's actually been in the last 4 years. Something very interesting to note. Market is expecting this to move more than usual. So I feel okay about it because it's a relatively big company. I might look into some of the fundamentals around it. Like, how is this thing being priced? Like, what's the PE of this company? Things like that. Because, I got to think about, like, what could be the surprise here? Why is the implied move higher? If the implied move's just higher because other companies in the industry have moved a lot, but this is kind of adjusted and it's like a pretty stable company, then I'll feel totally comfortable selling vol here. But if not, then I'm still going to do it, but I might try and size it down or something. All right, so that's pretty much it for this trade. Really high implied move, really good back test, but you might want to take a look at the sector, see what's going on there, and see how this company fares relative to its competition. I probably won't go like crazy deep into it, but I just want to get some sort of a handle. Make sure that I'm not missing like any very blatant red flags. All right, let's do one more here together. GKOS. No, not really liquid enough. I remember I took a look at this. It looks awesome. Like, I'll definitely take a look at the chain closer to market close, and if it looks good, I probably will trade it. But we need to keep in mind that there's 450 daily options traded on average, so it's pretty low. Let's see. Next up, we can take a look here at HIMS. $21 stock, lots of liquidity, big moves here, big moves. All right, this one's a little scary, right? Big moves, big returns, really high implied move. So I'm not going to dive too deep into this here. You guys get the idea of the analysis. Just overlay the template from the one we did just now onto this. The things that are mainly different here is we're talking about way bigger moves, right? Like, this is a ticker that moves a lot, and it's a much smaller company. Is it reasonable for something like this to double in price? Yes. Get cut in half? Yes. That stuff happens to companies of this size like all the time. So I'm going to want to be stressing this thing to like a 50% move, right? Like, you got to stress this to a big move. There's a good chance that happens, right? Like, if we look historically here, there is a lot of movement, right? There's two events that were like pretty bad beats. We'll want to keep an eye out for those. And then a lot of the other ones are closer. So like, I even got to check, like, does this thing have weekly options? Because if it doesn't, then I'm probably not trading it. So yeah, there's a few things that'll need to be kept in mind here. This is a little bit sketchier. I'd be a lot carefuler with this. Make sure that you don't oversize it if you do take this trade. Keep it small, right? Keep it small, and that way you still have a little bit more diversification on, but it's not as sketchy, right? You also keep in mind, like, something to think about here, right? Like a 17.5% move, that's a big move, right? Can this thing really keep moving at that rate for so long? Like, yeah, it's obviously possible. It's a small company, but the thing that's nice about having such a high implied move is, like, if you sell the straddle here, for this thing to be a 100% loser on the straddle premium, it needs to move like 40% almost, right? 35%. It's a huge move. So keep that in mind as you look at this trade. I'd probably just sell like an at the money straddle here, something like that. Maybe like a little bit of width if it increases it to like maybe 20% moves. But that's really it. And then I basically am going to follow that same analysis and work my way through more or less the first 50 of these, something like that. I'll probably work through all of these, put together a list of hopefully 10 trades to take, and then that'll be what I do today. So yeah, if you have any questions about this, feel free to leave them in the comments. Obviously, like the video, help us out. I've noticed we've been getting a few more members from these videos. That makes me really happy to see. I'm glad that y'all are liking the content. We're doing this live together. It's fun. It's a good strategy. I really like earnings. I'll probably do another one eventually just for the ETF strategy. And one last thing, in case you made it to the end here, I'll just let you know that we are also working on putting out a new masterclass just for learning the basics of options, free on YouTube. It'll be based on the blogs that I've written already. Basically, I found an AI tool that's going to turn them into PowerPoints for me, and then I'll edit the PowerPoints, and then I'll just post up a YouTube video series that's like cleaned up. It's kind of like a cleaned up version of the PA Academy that we had originally. And hopefully y'all like that. Hopefully it helps us attract some more good members as we build up our community towards that 1,000 user mark. I'd love to have a great community of 1,000 good traders working together, doing the earnings and ETF as a base, but really going beyond that and doing some other cool stuff. So let's see how that goes, and hopefully y'all like it. And that's pretty much it for today. I'll do another update video on Wednesday, and of course you can catch me in the group if you're a PA member. We'll be chatting about the trades there. And yeah, let me know if you have any questions. All right, take care.